Alright guys, GK the Trader here. I'm sitting down to review the NASDAQ and the S&P 500. Today is Monday, November 13th, 2023. Now, we're starting here on the daily time frame, of course. The most important time frame. Only two levels here I was using this morning on the daily time frame. This inefficiency that we repriced to, I wanted to see how we acted once we traded to the high end of it. And then these down close candles right here. So I'm going to flip over to the ES quick. So this upper portion here of this inefficiency, I'm using this because this portion was already repriced to. So I'm using the high end of it here and the low that wasn't traded to yet. So we repriced to that. We opened here on Monday. We traded down, matched this high. So this previous daily high, that is a discount array. We traded to that. And it's also one order block. These two down close candles. This is one order block. So I'm going to go ahead and flip down to the lower time frames now because it's Monday. And when we have this type of price action where we already delivered higher time frame objectives here, it's better to rely on the lower time frames. And that's exactly what I did today. So let's go to the hourly time frame. If you take a look here at these two lines here, you see below what? We have the midnight opening price here. We traded below that. What do we do below midnight openings? We accumulate long positions to the upside. So what do? We returned below opening price to do what? Knock out the sell side liquidity right here at midnight. Why is this an important sell side liquidity pool? Because it's a time-based liquidity pool. So the midnight low swept, and then we traded into this discount inefficiency right here in the respective midpoint. And as soon as I saw this 9 o'clock candle trade down and then close at the upper portion of this inefficiency, that right there was a key signature that allowed me to trust longs going into the morning here. So let's go over to the ES quick. Same thing. We went below the midnight opening price to do what? Sweep this time-based liquidity pool. And we failed to get down to this inefficiency. That right there is a key signature that indicates strength. So whenever we sweep the sell stops and go below midnight opening price and we fail to get to a lower discount array, that right there shows relative strength to the upside. One more level I was looking at here on the hourly, we have this breaker right here. So take a look here. We have this up close candle right here. We have this low, high, lower low, and then we shift the whole way above that. Once we get above this high, we're going to be looking at this specific up close candle here, the last down close candle before we traded below these lows. So we traded that twice, and we closed above it at that 9 o'clock candle. Very important. So I'm going to go ahead and go down to NASDAQ now. So everything I just outlined for you on the hourly time frame and daily was key for the lower time frames. So let's go ahead and go to the 15-minute time frame. And when I was going long in here, I was specifically using, as you saw in the video, this inverse fair value gap. Why this one? Because this is the one that London created right here at 1 a.m. So immediately, let's just drop down to the 5-minute time frame. And what do we have here? We have a change in the state of delivery above what? This down close candle. So this is the order block. Key time of day. It was formed after we swept the sell side liquidity pool. So that's a high probability order block. And we shift above that. Shift above the opening in a discount. So what do? You take the opening here. And as soon as we have this sensation right here, everything I outlined on the higher time frames, and then as soon as we get that change in the state of delivery above the opening price right here, what is it going to want to do? Come up for the buy side. So this was the main target for today as prompted to my inner circle members. Switch the color on that. So this is the buy side liquidity above what? The 930 high matched with this. So these are relatively clean highs at 930. So this is another time-based liquidity pool. Let's take our range from today. And where do these just so happen to reside at? Premium, above premium. So we're in a discount and we're looking for this premium inefficiency and premium buy side. and then this premium inefficiency up here. So real time, ahead of time, all of my inner circle members were given this level right here. So I called out 1550 flat. So 15,550 flat right here. Obviously it went higher than that, but this is way more than enough on a Monday. So let's go ahead and just drop down to the lower time frames. I'm gonna mark this out as well because I was using this inversely. So if you look at the 5-minute time frame, after we get that change in the state of delivery, you see we close multiple times at the high end of this inverse gap right here. So very important. Let's drop down to the 1-minute time frame. And if we look at the 1-minute time frame right away, I can tell you this right here is classic low resistance liquidity round. So see how many times it goes back and forth, back and forth, back and forth, but ultimately still works up into the levels I wanted to see traded to. So this morning in the Inner Circle Discord, I was giving signals. I wasn't live streaming for them today, but I prompted a long right here, and I told them to get out, take profit 1 right up at this inefficiency, and then take profit 2 would be right up here. And then obviously with the video, I called for longs right around here, and then marked out the 15,550 level. So change of the state of delivery on the 5-minute time frame. Why is it important around this time? Because we entered that first AM session macro. So right here, we entered this macro right here. What's that? 950 to 1010. So as soon as we trade up here, I waited for us to trade into this inefficiency here. Right here. So boom, we traded into this inverse gap and this 1-minute gap right here. We respected that. I waited for that sensation to take place. And then what? I waited for that second retracement price leg. So this will be the classic low risk buy, but obviously I'm not buying that. I needed to see a little bit more out of price action. And then I waited for these down close candles to form. And as soon as we dropped, look, right on this candle right here, as soon as we dropped down to the opening of these down close candles, what is it? An order block. Block right here. As soon as we traded down there, boom, I went long. Take profit 1 hit. And then take profit 2 prompted was also hit for all my inner circle members. So this was the first setup here. Obviously I was exited out of the marketplace before we got up here where you guys saw in the video, but I got right back in sync with price action. I saw that we traded above this inverse gap, and then what did we do again? We traded right back down to the low end or the high end of this inverse fair value gap, and at the same time, we were trading down into this lower inefficiency. And I also apologize if you hear my dog barking in the background. So, boom, went long right there. And I'm actually going to flip the regular trading hour gap right here quick. And what do we have above buy side in a premium? We have this regular trading hour gap left behind. So this was likely to be priced in as well above the buy side. So a quick little thing there. And then I'm going to bring your attention to this down close candle right here. And I'm going to take the midpoint. Yes, we traded below it. But in low resistance liquidity run conditions, you can't always expect perfect precision. So it's completely fine that we closed just below it. The important part is we worked in it, and then we traded into the gap, and then the high end of this inverse gap. So let me just mark that out to make it easier for you. So 3 things we're going long on. And why am I using this down close candle right here? Because it's a beefy down close candle. Where at? Well, let's take our range. And it just so happens to reside right around equilibrium of the daily range. So 2 buys down here. Prompted to my inner circle members ahead of time, real time, as always. We do this every day. But anyways, 2 buys in a discount. So the discount was just simply this red shaded area. And then exiting in a premium. Premium what? Buy side. So this is everything that I used today for today's trades. I hope you guys found this one insightful. And I'll be live streaming tomorrow for my inner circle members. So for you guys, I'll see you tomorrow on the live stream. And have a good rest of your day.